So I'll be teaching you on how to trade the initial jobless claims by the US, of course, and this occurs every 2 weeks on the markets. So if you've been really planning to trade this news impact, do watch this video till the end. I promise you, you won't regret. So of course, as you can see, we are on the initial jobless claims. I'm about to take you through this whole presentation, and hopefully it's gonna bring some enlightenment to trading this event. I'm gonna show you a strategy that I've spotted through consistency. So let's go all the way here. Just per definition, this is just a procedure that we do each and every time to make sure that you guys understand. Of course, we know that we are trading the US initial jobless claims, and of course, as the name suggests, it suggests that it measures the amount of individuals who filed for unemployment insurance, okay, for the very first time during the past week. This is the earliest US economic data, but the impact of course varies from week to week. So usually you will get it every 2 weeks or every 1 week, depending on that month of course that it occurs. Okay, so let's go on now to the nitty-gritty of why you're watching this. I didn't want to waste any further time, guys. I just wanted to go straight to the strategy. But once I've let you know of the strategy, don't just skip and say you know it all, right? There are variable information that I'm gonna give thereafter. Okay, so I have a few scenarios here that I've put on charts. These are different pairs. Usually it's the US dollar, yen, and as well as we have Nasdaq there, as well as gold. Okay, so this, of course, they are affected by the initial jobless claims. So step one of the strategy is quite simple. How do I know this? Over several data, so I take 100 samples, can't put all of them. I take 100 samples and run them through to see the consistency of when this impact occurs. What does it do? And take that pattern, and therefore I use it to its probability. So for example, usually 8 out of 10 times, right? For example, 8 out of 10 times when the market is bullish or bearish, when the initial jobless claim comes in, it's gonna make the market, or rather it's gonna move along with the market. You know, some of the events we've traded here, they just reverse the market. Okay, some of you have watched the videos, but this one, it's a trend following news impact. That means it just goes to fulfill what structure was already doing. So follow structure and the trend. If the market is bullish or bearish, 8 out of 10 times it will follow. So for example, here this was the US dollar over here, US dollar Japanese yen, and as you can see, the market was quite bearish. I'm gonna draw for you there just to see exactly what I'm talking about. Let's take black, that's all right. We can see that the trend was bearish, and when the market came in, it also went bearish. So this is the movement right here that you see. Okay, let's remove that. Okay, that was the movement there. If we can go all the way even here, guys, we can also see the very same thing. Okay, in this case, this was on Nasdaq, and it's a tip that I'm gonna give you, but this as well was gold. Okay, and as you can see, this was following the trend over here, and when the market came in, it pushed the market all the way up into becoming bullish. Now this was Nasdaq just fell, but some of you can see that this was a trend reversal. So the market was bullish at first, and the market of course tanked all the way down. Now this is where we get to talk about something very important that is gonna be important for those who wanna trade Nasdaq and gold outside of trading the Japanese yen, which is the basis of this strategy and where I ran tests on. Okay, so the power of correlation will help us in the sense that understanding negative correlation as well as understanding positive correlation. What do I mean by that? Negative is simply when pairs go opposite. So simply when the US dollar is bullish, Nasdaq is bearish. When the US dollar is bearish, Nasdaq is bullish. Okay, and of course, when US dollar pairs go in the same direction, could pairs go in the opposite direction. So how are you gonna go back? Let's go back here. How are you gonna predict this now? Whenever you want to trade Nasdaq, you don't apply the strategy on Nasdaq, you apply it on US Japanese yen or US dollar yen basically. So you will follow the trend and see, okay, it says the market is gonna sell off, then you're gonna go and buy off on NASDAQ. Same applies here. If the market was selling off, and of course it will now sell off on the other pair or go the opposite. Okay, so that's how the market will work. If NASDAQ is selling, the US dollar will buy. Okay, I hope that makes sense. Let's go on now to another important fact that I need to teach you over here. I don't want to waste any more time going into the nitty-gritties of this family, but of course we're gonna go into the rules over here. So when it comes to the rules, rule number one is obey those rules when you're trading this method. Remember, rules ensure that you use the strategy within the parameters that it allows. Many of you have taught videos before, I've taught strategies before, and you ask me ridiculous questions that are outside of the parameters of the strategy. Okay, rule number one, if there is no clear trend, do not force the trade. If the market is ranging whatsoever, as you can see, I didn't teach it on the ranging markets, so because that's when I will stay off the market. It needs to be a clear trend. Okay, number one, or rather on that trend note, right, many of you are gonna ask, what trend are you talking about? The M15 time frame. Can I say it again, because people are gonna ask in the comment section? The M15 time frame. So the M15 time frame, that's where you want to see the clear trend on USDJPY. Okay, as well as, of course, if you're trading NASDAQ, USDJPY gold, USDJPY, but rather use USDJPY as the basis of predicting other pairs in the opposite direction. Number two, which is very important, and it's just only two rules over here, is that don't over risk. Do not over risk. Many of you are trading news trading with the mentality that you have to go full margin and it's gonna double your account. Anything can happen when it comes to news trading. Remember, those who've been following us for a long time, you know we have what we call trend following news or news impacts, and we've got what we call reversal news impacts or pullback news impacts, as well as what we call a whipsaw news event. So what can happen is that the market can whipsaw before it goes in your overall direction, and that can do some really big damage on your account. But if you're risking less and you can survive that whipsaw, then you can actually make profits on that bad day or on that bad movement. I hope you understand me. So make sure you risk less than 1%. Okay, I risk less than 1%. Unless you're risking with money you're willing to lose, that's on you, right? You hold the advantage on your side. When you're on the phone, you know that this money is important to what extent. Okay, and of course, I believe here I just want to talk to you to say thank you so much for watching this video. Make sure, of course, you do subscribe to us. I would truly appreciate, because we are pumping, you know, valuable content for this channel for you guys, so you can grow as traders. And of course, if you guys need this PDF, please do comment down below, and definitely I will ask for your emails or something like that. But I don't know, I'll probably send you a link, and then you can go ahead and click this PDF so you can always save it within your archives. Thank you. I will see you on the next video.